You think you've found the best buy signal. You enter the trade and start dreaming about driving your Lamborghini on Dubai's streets. But all of a sudden, you're kicked out of that dream and realize how savage this market is. If that sounds like you, then you've clicked the right video. Today's strategy is like finding pizza in the fridge at midnight. No indicators needed, and powerful even in its simplicity. This strategy includes 3 golden steps, which I'm going to explain. At the end of this video, we will backtest this strategy to show its power. Alright, I think that's enough for intro. Let's begin. Most traders mark support and resistance levels, but few actually use them the right way. So first, let's start with the basics. Resistance is an area that, in theory, will stop the price from going any higher. On the other hand, support is an area where the price tends to react by moving higher. I know what you're thinking. If we identify these levels correctly, we can tell where to enter and where to exit the market. That brings us to step 1, identifying the support and resistance levels accurately. First of all, support and resistance are areas of price, not a single level. So instead of using a horizontal line, use a rectangle. For better results, choose higher time frame than you usually trade. Find at least 2 lows at same level and connect them to each other with a rectangle. This is the support level. For the resistance, find at least 2 highs and connect them to each other. This is the resistance level. The more these levels are touched and tested, the stronger they become. Don't make it hard to yourself. You can draw these levels through bodies or even shadow of the candles, and it's all correct. If you are having trouble finding these levels, you can change your chart to line graph. Once you draw the levels, change it back to candlesticks. Before we dive into the strategy, support your brother here by hitting the like button and subscribing to the channel. Generally, you want to buy at support and sell at resistance. But what if the market trend is strong and breaks these levels? That's why we need confirmation. Here's an example. When price hits support, 2 things can happen. Either it bounces up or it breaks through. And if it breaks, there are 3 possibilities. It keeps falling, it fakes out and reverses, meaning it was a false breakout, or it pulls back to retest before dropping again. Out of these 4 scenarios, only these 2 are really safe to trade. Here's price reaches to the support level, so I only trade in 2 cases. Either it bounces up, or it breaks, retests, and then drops. Which in this case, it does break the support level. But I don't enter a short here because it could be a false breakout. I just wait for a retest. And there it is. The price retests the level, and then drops. For me, that's a strong sell signal. So I enter a short position, put the stop loss above this level, and set the risk to reward ratio around 1.5. Boom. That's a 50% profit. Another example. Here price breaks the support level, it pulls back and retests the level. Then it drops again, so retest is done. And I can see a bearish candle pattern, so I can enter a sell position here. Put your stop loss above the support level, and risk to reward ratio would be around 1.5. This is a winning trade. Here, the price reaches the support level and seems to be respecting it, so I look for a buy position. For a better and safer result, choose the trend line tool and connect these highs together. When the price crosses the trend line, we can enter a long position. Put your stop loss below the support level and enter. Congratulations, this is another winning trade. Here, the price hits the resistance level, so we wait for one of 2 patterns, either a respect or a retest. The price seems to respect the resistance, so we draw our trend line. Then the price breaks the trend line, and we can enter a short position. Put your stop loss above the resistance level with a risk to reward ratio of around 1.5. Another winning trade. Another example. Price breaks the resistance level, and then it retests the level. After this bullish candle pattern, we can enter a long position very confidently. Put your stop loss below the resistance level, and enter the trade with 1.5 risk to reward ratio. Another 50% profit. So traders, if you've got questions about this strategy, drop them in the comments. Now, let's make it clearer with a backtest.
TradingView.